Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are 2 minutes away from the end of that trading day. Taylor Riggs, Katie Greifeld, Sonali Basak in for Caroline Hyde, counting you down to the closing bell. Here to take us beyond the bell, we do it in our global simulcast. Pleased to say Carol Massar, Tim Stenovec, still back with us, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the day. And Carol, it's a crucial moment that has the S&P 500 trying to claw back from some of the deep losses.
Yeah, and I would say what a pretty significant bounce back from some of the lows that we saw earlier in the session. And you've got even a little bit of a green print on the NASDAQ, just barely. But if you're in the bank sector, not so good following those results from JP Morgan and Morgan Stanley. JP Morgan in particular freaking out investors. The KBW Bank Index still down about 1.9%. So some major underperformance there, Tim.
We just had an interesting conversation with Walter Todd, the president and CIO over at Greenwood Capital Associates. They've got about $1.4 billion in assets under management. He said that if we hold this 3,700 level in the S&P, 3,675, maybe we can see a foundation to move higher. He said super important to, of course, watch the earnings, but pay attention to the commentary more so than what these executives are saying in their press releases, because the commentary is where you'll get a really good idea of how these companies are thinking about the economy. And we could actually see a durable move back up to 4,000, he says, set the stage for a rally following earnings.
So like what we heard from Jamie Dimon?
Yeah, it's exactly what he was referring to.
Wow.
The commentary, much more than what was in the release.
Maybe he listened to Jamie Dimon this
He
morning.
definitely did, because he referenced it several times. A lot of people did.
Well, 4,000 does feel a little far away right now. The S&P 500 still below 3,800.
And some of the interesting calls we've actually heard to the downside, looking more towards a 33 or 3,400. Of course, if some of the economic data starts to roll over, at least for now, it looks like for the actual markets, not the economic data, you're going to get a Dow Jones that closes as more the underperformer. You're off about 0.5%. And S&P maybe inch on the day. You're down about 11 or 12 points, but you're only off about 0.3%. Carol, for me, it is big tech. Is this more of the new classic safe haven, right? With the NASDAQ and the NASDAQ 100. The clear outperformers.
Yeah, fascinating, right? To see it just kind of edge into the green here. Internals are what we like to talk about, and I'm just going to go back to the large caps, the S&P 500. If you dig a little bit deeper, you still see, though, much more negative sentiment. Katie, you have 353 names in that index, lower on the day, 150 higher. So still more of them having some struggling in today's session.
And if you take a look under the hood at some of the industry groups, you do see that negative sentiment, too. If you look at what is leading, you do have food and some of those staples names. A lot of that, though, is Costco, again, moving higher on the heels of that upgrade that they got from Deutsche Bank. You do have semis getting a bid as well. Qualcomm, some of the other big chip makers have really been a bright spot in this market so far this week. But then if you look at what isn't doing too well, you've got more red bars than green bars. And right at the bottom, you can see the banks. Of course, as we finally do kick off into earnings season, you also have energy, materials, and some of the insurance names there as well, Carol.
All right, so Katie, let's get to let's drill down even a little bit deeper into some of the individual names. So I'm going to get to the gainers, and Katie mentioned some of them. First of all, I want to mention TSM, Taiwan Semiconductor Manufacturing. We got some news overnight. This is Apple's most important chip maker, and they did give a little bit of a warning, but they did raise its 2022 revenue forecast. They did warn at the same time that it will trim spending on expansion by as much as 9%, but nonetheless, TSM up about 3% in today's session. All right, Costco, we heard that from Katie, top in the S&P 500 and the NASDAQ 100, holding on to its gains really for the most part for the day, up about 4% today. Deutsche Bank upgrading to buy from hold. The analysts there writing, Costco is one of the most consistent operators in our group, and its steady traffic gains and high membership renewal rates serve as key differentiators in an increasingly uncertain backdrop. So talk about an endorsement. And then let's get to Qualcomm. It was up about 4.6%, top of the NASDAQ 100, number one in the S&P 500. The JP Morgan analyst over there saying, reiterating its overweight rating, but put the company on the firm's analyst focus list. And here's what they had to say. It was a valuation call, Taylor. They said the stock offers a large potential upside for investors if Qualcomm continues to gain shares against competitors. So a little bit of an if, but nonetheless, that stock up 4.6%.
I'm going to give you another sort of big fundamental mover here, Carol. Take a look at shares of Pinterest, at one point spiking up about 19%. This is after a report from Dow Jones that Elliott Management has taken a more than 9% stake in that company. So again, jumping after Elliott Management, according to reports from Dow Jones, may be setting his sights on Pinterest. Tim's certainly a huge mover now to the upside in post-market, now 25%.
Yeah, as Dow Jones reminds us, though, that one of the co-founders of Pinterest, Ben Silbermann, who stepped down just a few months ago for Bill Ready to take over, he has quite a big voting stake in the company. So we'll see what Elliott could do when it comes to forcing changes there. We'll keep an eye on Pinterest. Shares higher by 25% right now. Let's talk about some of the decliners in today's market. JP Morgan Chase finishing the day down by 3.5%, closing at its lowest level since November of 2020. We've been talking about it all day. The company halting share buybacks, earnings missed estimates. The company did also add $428 million that it sets aside for potentially sour loans, reflecting a, quote, modest deterioration in the economic outlook. Morgan Stanley also finishing the day down just fractionally, 0.4%. It was down nearly 4% earlier in the day after it reported worse than expected second quarter results, Sonali, including revenue of $13.1 billion compared to expectations for $13.3 billion. Sonali, you were on that call. What were your takeaways?
Yeah, there were a few things here, and it was how uncertain the second half of the year is, Tim. However, even with those uncertainties, you're seeing the trading businesses, the wealth businesses hold up a lot better than the consumer-focused businesses, even though that trading environment is still uncertain. I've got to say, since the high of last year, JP Morgan has lost more than $200 billion worth of its market value.
That's a lot.
Yes, definitely a lot. And you are seeing so many banks now trading below their book value. And, you know, we haven't seen the worst of it potentially yet. There's a lot of expectations here among Wall Street analysts that provisions for loan losses will start to rise more as the year goes on. We have not seen the face of a recession yet.
All right, and we still have many banks to hear from, not just the big ones coming up tomorrow and next week, but of course also the regionals that we continue to hear from. Taylor, I want to check in on one more. Novavax giving up that recent rally, shares falling today by more than 25% after regulators in the EU updated the product label to include information about a severe allergic reaction. Look at that, down 26% today.
I want to do yields as well. When you think about sort of a big story that we've had today, it's been all about sort of finding some direction, right, within these markets. You have bond yields, at least on a 2-year yield, coming down by about 2 basis points. Further out, Sonali, on the 5s and the 10s actually rising. So bond market searching for direction.
Yeah, I also want to get to some breaking news here too, because this is a big deal, a big move. Alphabet is adding former Goldman Sachs Chief Financial Officer Martin Chavez to its board. Remember, Marty Chavez was known for helping Goldman Sachs really transform on the technology front. And Alphabet, as we know, is one of those tech companies with a lot of financial ambitions. Marty now works at Sixth Street, which is a big private investment manager. The world is getting quite interesting on the talent front, guys.
What's the implications of this? Like, I think about board members, right, when they announce it. This is, I guess, the first change to the Alphabet board since 2020. That's when we saw Eric Schmidt depart the board. So what are the implications? What does this mean potentially in terms of what Alphabet does going forward?
Yeah, it's a great question, too. And you mentioned Eric Schmidt. Eric Schmidt and Marty actually know each other very well. But you have to wonder what the broader ambitions are here for Alphabet to get deeper into financial services, even cryptocurrencies. Marty was one of the first people really to talk to me at length about digital assets at scale across the world. And, you know, he thinks a lot about cybersecurity. We think a lot about what, you know, he worries about and thinks about, both from his former perch at Goldman and now on the board of Alphabet as he joins, worrying about cyber risks ahead.
And if we think about some of the other big after-hours news we got, I want to go back to Pinterest. We're getting a little bit more details. This is, of course, Dow Jones reporting Elliott taking a more than 9% stake in Pinterest. And you look at Pinterest shares after hours, now up more than 20%, 21%. A lot of movement in these after hours.
I also wonder how much is short covering, right? It was, what, about 8.5% of the outstanding float was short. I mean, this stock has been hammered down to about 51% so far this year. So you think about the scrambling that's going on just from a trading perspective right now.
There had been some fundamentals. We've talked a lot about sort of the new face of these social media companies in this post-COVID world, and Tim, I hate to sort of push us forward to next week as well, when we're going to get from Netflix. Again, not social media, but more when we think about sort of these classic stay-at-home stocks. Snap, of course, I know that you've been all over that stock in your coverage in the previous years about how the consumers are consuming, the health of the consumer, and how in this reopening trade we think about these traditional sort of stocks and e-commerce as well.
No, but you make a really good point about Netflix, Taylor, because if we think back to 3 months ago where we were, it was sort of the canary in the coal mine for the decline that we saw in the most recent quarter of not just tech stocks, but of the greater market. So we'll be watching closely to hear from Netflix about the health of the consumer. And then, of course, all those details about that ad-supported model that many people thought it would never, ever do.
Well, speaking of the consumer, we get a read on the consumer tomorrow. Retail sales for the month of June, then also the University of Michigan will get sentiment and expectations in terms of what consumers are thinking. So lots to kind of wrap up the week. And then a few more bank earnings. So Sonali, get some sleep. All right, we got to run, guys. That does it for our cross-platform coverage on radio, on TV, and YouTube. Beyond the Bell, we will be back again, same time, same place tomorrow.